So what's going on, everybody? What's going on? I haven't done this in a while, so actually, I haven't done it where I've done it over multiple platforms before. So basically, this is live, just going over, just covering the market. Just wanted to be able to provide some market value and insight. Going into this third. Uh, Actually the latter part of the year. We're in the third quarter now, but just wanted to provide some value to people who are in the market right now. Whether you're your home buyer, you're a seller, or you're an investor. Just want to give you an insight as far as how things in the real estate market is in the in the Sussex County area right now. So I've got a presentation that I put together, which is basically a summer real estate shift compared to numbers of June and July of this year. July just closing out yesterday. So I figured I'd just get a jump on it, provide you with some helpful insight, so that you can see what the market is doing, whether you're thinking about buying, whether you think about selling, whether you're an investor, thinking about, what price point should I be trying to target, trying to find properties that I might be able to get at a good value to be able to resell. And just point out the opportunities that I think are available for you in this current market. And so July's surprising market decline. So typically, from June is usually like a peak as far as real estate transactions. July, there's a little bit of a dip. But this year, it's a little bit more than anticipated. So July sales volumes dropped 16.8% compared to June sales. Transactions falling from 501 transactions to 417 homes sold in July. And so that's something that typically happens, not that much of a drop, but, again, just want to give you an idea of what the actual real numbers are right now. And so this next slide basically shows you what a typical summer sales decline would be: 7.5%, anywhere from 5 to 10% from June to July, as far as a drop in transactions. This summer, what we had here was a 16.8% decline. So looking at it this way, it looks like it's a really huge decline, but there's some numbers that I'm going to be going over with you a little bit after this that kind of bring that into perspective, and show you where some of the opportunities are. So the price paradox: 6.7% average price increase. So even though we had that price drop, the price at what homes were selling for in June compared to what they were selling for in July was a 6.7 price increase on average. Median price jump, which is where most of the sales were at, was about a $45,000 price increase from 455 to 500,000, and then the overall sales volume decline was 16.8%. So as you can see, the counterintuitive combination of the fewer sales yet higher sales price indicates a strategic shift, and buyer behavior with focus increasingly concentrated on premium properties. So what you're seeing is like a lot of properties are selling at or above the $500,000 price point, which is not your typical entry level home. That's typically your second home. You're retiring, you're moving here. That's where that price point is going to be, which also lends to let me know, as far as market expertise, that means a majority of the sales that are happening in the county right now are happening along the eastern side of the county, because that's where most of the new construction tends to be happening right now. And so if you go to the next slide, so market speed, time is money. Days on market decrease from 66 days in June to 55 days in July. That was 11-day improvement. And market velocity. Move-in ready homes sell quickly, and competitive bidding often within the first 30 days of listing the properties, i.e., like when you have a new construction home that is coming on the market in the beach area, typically it's almost done when they put it on the market. So they're, it's almost a finished product that's being showed. So when they come in, they can they don't have to visualize, the house is almost done, and they can put an offer in. So putting the offer in and getting under contract within 30 days doesn't necessarily mean it's going to close in that 45 days, but the buyers are a lot quicker to make a decision. Now, this was kind of interesting. Outdated properties. What do I mean by outdated properties? These are properties that are older resale homes that may not have had the updates or improvements to try to make them look as much like new construction as possible. What I always tell sellers, investors, when you are thinking about selling a house that is an older home, you want to do updates that make that house look as close to new construction as possible, because that's always going to be your competition. When people get into the market, and they think about buying a house, they're always thinking about buying new construction. That is, especially, an end use owner. They always would prefer, in most cases, I'm not gonna say always, because some people like, older houses, brownstones, or Victorian, or mid-century modern homes, just because of the architecture. But for the most part, most people that are coming into the market or retiring are looking for something that's going to be more of new construction. And so outdated properties, they sit on the market for a little bit longer, often requiring multiple price reductions from the time they get on the market, because a lot of times when they're pricing those properties, they're pricing them based off of the previous 30, 60-day comps. And the market changes every 30 days. So you can't anticipate where the market's going to go. You can only price it to where it is. If you have an influx of new construction or homes that maybe have been updated that come onto the market, is going to affect your marketability and your days on the market. So they tend to be on the market for a little bit longer than 90 days, and typically have a couple of price reductions before they go on contract. And so the total sales volume decreased 11% from June to July, falling from 293 million to 260 million. The 11% decline in total dollars is less than the actual volume. So volume was 16.8%. Dollars wise was only 11%, which lets you know that the homes that are selling are at a higher price point. Because if they were at a lower price point, that gap would probably would be even larger. As far as the decline in total dollars, it would probably be more than 16.8%. It might be somewhere around 20% if a lot of those transactions happen on the western side of the county. That's what makes sure I'm not missing anybody, if anybody tuned in. And if you're watching this and I'm not live anymore, just put some comments and let me know what you think about the information that I'm sharing with you. And so the market divide. So basically what I'm seeing now, and this is just based off of numbers. This is just data, from June sales and January sales. And again, I want to preface this by this is just residential family homes. So anything that had ground rent, anything that had a land lease is not included in these numbers. Just to give you an idea, in what was it, July, it was 417 sales. But if you added in the land lease and ground rent properties, it took it up to 475. So it was about 50 more sales. But for the most part, that's I'm not gonna say niche market, but it somewhat is. The people that are looking in that and looking for land lease or ground rent don't make up a majority of the market. So these numbers, what I'm presenting to you, is based on the majority of the market where most of the sales happen at. And then maybe down the line I'll break those numbers out specifically, so that people can see how that market is moving as well. But basically what you have is two markets. You got a premium market and you got an entry level market. Days on market for your premium market, those are your houses 550, 600 and above. Those are on the market 15 to 30 days. most cases, they're getting multiple offers. Prices are at 5 to 10% above the asking price, or the offers are 5 to 10% above the asking price. Minimal inspections happen in that time. Why? Because it's mostly newer homes or newer constructions, or houses that have been, well maintained and updated over the time that those owners have been there. And typically, you're going to have a financially strong buyer, not needing much help as far as closing costs, probably putting a lot of money down, or at least a conventional loan. And then you have your entry level market. Days on market for the entry level homes. So I would say that's anywhere from 450 down. And our market right now, which is kind of hard to believe, is, days on market is 60 to 100, 120 days. You have few competitive offers. If the house is priced right and it's updated, you're going to have multiple offers because you don't have that come up in the market as much. So if a house is priced right, and typically if it's priced slightly below where the market says it should be at, that's an indicator for a buyer that this seller is really serious about selling the property, and it usually generates a lot of interest from buyers in that market. So just something to consider if you're selling a house, an existing house, and you made the updates and repairs, and the house is in move-in condition. Slight pricing it in this market right now slightly below what the market says it's worth could be really beneficial in attracting the buyers who actually are ready to buy right now. But on the most part, you have few competitive offers. Price reductions are common. Obviously, if you have a house on the market, for over 60 days, at about 30 days, you're gonna start having conversations about price reductions, and expect, extensive inspections. Most of those people are going to want a home inspection, a termite inspection, a septic inspection, a water test. The typical first time home buyer test, and a lot of times their financing is actually what requires it. And then they're going to have first time home buyer financing. So they're going to have FHA, USDA, VA. VA is not necessarily first time home buyer, but typically, when people are using their VA, they're purchasing their first home, or they've sold their first home, and then they're reusing the VA to buy a second home, because you can't use VA for an investment property. So the people that are buying these homes are going to be staying there, and VA does have requirements. And so with some of those requirements, like with FHA and VA, there are, things as far as the house criteria that it needs to meet in order to be able to um, to get past the appraisal stage to be able to get financed. And so basically, what you have is two markets. Um, Bifurcation means basically a divide. You have a divide from one market to another market. So seller strategies in this new market: price it realistically. Set price based on July comps, not June's inflated expectations. Overpricing leads to an extended market time and eventual price reductions. So you'd be better off pricing it slightly below the market, getting interest, having people bid against each other, get a higher value than pricing it at or above the market, which could lead you to be able to be sitting on the market for longer than what you would like, and would ultimately mean that you would have to end up selling it for a little bit less. Invest in presentation, professional stages, photography, pre-listing improvements. Get somebody like myself, real estate agent, in before you start spending too much money, because you might be focused on the things that actually aren't going to bring you value when putting your house on the market. So you certainly want to talk to a professional that's going to guide you through that process, help you be able to make a good informed decision. And then offer incentives. Consider closing cost credits, home warranties, flexible closing dates to attract today's selective buyers. You don't have to do that as much with the premium market, but in the entry level homes, those are things that you're going to want to focus on and have in the back of your mind when you decide to put those properties on the market. And to act quickly. Consider selling before potential August, September softening. Certainly, if you're thinking about selling, you want to have that house on the market before we start getting into, the big holidays, November being, Thanksgiving, December being, Christmas. You certainly want to have your house on the market, for a good amount of time before we head into there, because there's always a little bit softening. And for people, and as a buyer, when you see houses on the market during that time frame, those sellers are motivated. They have to sell. The house is on the market for a particular reason. And so just keep that in mind. And so here's some tips, some things for buyers and investors, opportunities. Target properties that have been on the market for over 45 days. If they've been on the market 45 days, they got motivated sellers, especially coming out of what we've been in the last 5-6 years, where houses have been selling for quicker than 45 days. I'm been in this business long enough to remember, when that was a quick sale, 45 days was considered a quick sale. Now, it's shifted, and it seems like a house has been on the market forever. It's been on for over 45 days. And then, sub 450 inventory, increased inventory under 450K, creates new opportunities for first time home buyers. That's also, a range that you want to stay under. If you're an investor, you're looking for properties to buy and flip and fix up. You certainly don't want to be doing anything over that 450K. And I would even say, for those investors that build spec homes, I wouldn't be building the spec home unless you're in the luxury market, more premium market on the western side of the county, on the eastern side of the county, to put in, because most people that are going to spend that much are spending that much because they want to get a house that they really, really like, or they want to be in a specific market. So somebody who really wants to be close to the beach and in that beach area is more likely to build a spec home or speculative home, like from a large builder, because they value the location over getting everything that they want. If you have a buyer that isn't as concerned about being over to the beach area and what they care about is getting a home of their choice, they're less likely to buy a spec home that's not built exactly to what they want and can afford at that point in time. The fall buying window, strategic pacing pays off as September, October typically brings more favorable conditions with less competition. And like I said before, those people who go into October, November that have the house on the market, those are people that really have to sell. So you want to take that in consideration. And then request concessions. This is for buyers. Beyond price negotiations, seek seller concessions on closing costs and repairs, even furnishings, appliances. Not so much as furnishing, but appliances. Most people think, hey, I'm buying a house, it has a washer and dryer in there, it must go with the property. Not in all cases does it go with the property. So just keep that in mind as you're moving through the market, whether you're a buyer or an investor. And so as far as market outlooks and next step, we're at an inflection point. Current data suggests we are at a significant place where they could be not. I'm going to say it's going to be further softening throughout the third quarter, especially with more inventory coming onto the market, rates being where they are, and nobody knows when those rates are going to go down. And then, I'll say it. I think there's going to be a softening job market, and some people aren't going to be as confident about their jobs, especially with the influx and the intrusion that AI is causing in the workplace. Where you have AI that can do things that it would have taken most people a week or 2 weeks to do, and it's doing it in a minute. Some of these jobs that people are doing are going to go away, and it's just like, what is the future job scope going to look like? So those are all things that I think that you should be considerate about. And so if you have any questions about this, feel free to DM me, put something in the comments below. I'm going to try to do this a little bit more often on a monthly basis, as far as like just a market outlook, just give you just a snapshot of what our market is doing, being at a hyper local level. And so I think, again, just shoot out to me, let me know what you think of the content. Just want to be, just want to be a source of knowledge and information for you to be able to take a look at, and then ask any questions, then help you along the way. So I appreciate you for tuning in. I hope you find this information helpful. Again, look forward to talking to you and meeting with you.